Rohr here with an early global view on Thursday, November 13th. It's currently 6:45 a.m. U.S. Central Time. And it's been quite interesting on the divergence between the different equities, and we'll be getting into that shortly. But for right now, the macro factors from yesterday's weak European influences were shaken off very readily by the S&P. So, what does all this mean to the markets? And it means that, again, the triple whammy dovish or weak influences yesterday had the U.S. S&P 500 here on the hourly chart, 30-minute on the right, trading down around 2026 electronically, but then the actual opening and low are about 2028. And it was interesting because we had noted there would have been pretty good support even anywhere down into 2025 to the 2022 area. And that included, if they had taken a bit more pressure, this area right here. And in fact, that is still, even if this channel should break on recent form 2025 to 2022, is some pretty good fresh congestion on a short-term basis. The bigger support, of course, if it should get back down there, will be back around this old violated high. This was 2012 and a half December contract back in September, and that was 2013 and a half, about the same time, mid-month, that September contract went off the board. That was the lead contract. So there's some congestion maybe about 2018. We figure the support intensifies around 2013, and especially into the gaps in congestion at these negated down breaks and upward acceleration levels back at 2027 to 2005, because that also gets back to the older, bigger gaps on the way up and on the way down going back into September. And the resistance will be up this week into 2050, which is the weekly oscillator resistance. We'll see a bit more of on the weekly chart, and also the weekly topping line up into the 2060 area. And you can see how now on this topping line on the hourly chart also, you're starting to look like out into midday to day onward, you have resistance as well up into about 2050 to maybe somewhat above it. And that pretty much does it for the short-term view of the S&P 500.